Healthy and wealthy morning all. Hope all are doing good and enjoying our podcast. It's good. I'm seeing the positive feedbacks and people are able to understand our podcast and they're also getting more knowledge on the in the selection of the right products, the right investments, and how to beat the inflation, how to get the good returns. Okay, so how to compare with the different kind of assets or investments till now, whatever we are following, like gold, real estate, FDs, RDs, cheats, different investments till now we followed, right? Okay. Today, we want to see the is shares and mutual funds both are same or not. So majority of the people thinking, right, it's just a shares only. And already in our previous videos, like myths and facts about the mutual funds, we given the certain idea, and now we want to take it up into the different parameters or what is the differences in between the equities or shares and mutual funds. The first difference is the if you want to involve in the equities or shares, the demat account is the mandatory. Okay. Coming to the mutual funds, it's not the mandatory. Okay. And we have the lot of mutual funds accounts. So we are considering this separately. Okay. And second one is the for demat generally annual maintenance charges will be there. That will be around 400 or 500 or depends on the companies where you are open the demat account. Okay. And mutual fund accounts that is free of cost only, like NJ Wealth companies where I have the tie-up. So those companies giving the free of cost only. Okay. There is some platforms they are doing the very minimal charges. Majority of the companies it's giving free of cost only, but is the just a mutual fund account. Okay. Generally, in the demat, for each transactions, there will be charges. If you are purchasing, there will be some transaction charges. The same thing applicable for the when you are selling also. Okay. But if you are coming to the mutual funds, right, just exit load will be there. That is also depends on the fund where we are invested. The rule is not applicable for the all the funds. Right. This is applicable when you are done the withdrawal only. It's not the time of the purchasing. Okay. And say some funds after 3 months itself, they are not considering any kind of exit loads. Some funds after 6 months, they are not considering any kind of exit loads. But majority of the funds, they will consider the exit load if you are withdrawing before 1 year only. That is the short term. Okay. So selection of shares is it's a completely individual basis here. Okay, so what are the risk it is existed, how you need to select that particular share and all. That is the person who is investing in the demat accounts. Okay, but when coming to the mutual funds, right? So this is decisions are taken by the fund advisors, sorry, fund managers. Okay, so who are the professionals and they are managing that particular fund. Okay, and yeah, so the selection of companies, that decision, it will be taken care by the fund professionals only here. Okay, and what are the instruments it has to be invested, like the gold, real estate, or silver, or sector funds, or within India only, or outside countries also. So it depends on the fund. The selection will be taken care by the fund manager. Okay, that is the advantage for us. In the shares, just we are calling as the number of shares. Okay, but in the mutual funds, we are calling the allocation. It is the units only. Okay, and the company, whatever it is listed, by chance it has been closed, right? That can be any reasons. We can't recover that money from the such companies or maybe in such scenarios. Okay. Even no regulatory can help in the share market if that kind of scenarios happen. Okay. Example, Kingfisher companies, these and all what happened. In share market, we used to see such kind of scenarios very frequently. Okay. But nowadays it's reduced to the kind of closing the companies and all due to a lot of SEBI initiations. Okay. But when you're coming to the mutual funds, right, they are investing in the more than 50 companies. That is also depending on the fund. It's not guarantee every fund has the 50 companies. Some funds maybe they are having the 25, 30 like that also. Okay. As a multiple companies, the investment is segregating here. Okay. So by any chance, one or two companies is closed, right? It won't give the entire loss to the your portfolio, entire loss to the whatever the investment to be done to the mutual fund, right? There will be minimal loss. There is chances. It's not a guarantee. Since the diversification is happening, even we are not investing in the one company here. I mean, the fund manager is not investing in the one company here. Okay, so the diversification is happening in the properly depending on the fund whatever we are choosing for the investment. That is the main advantage. Okay, and we'll see one example as well. And if you want to invest the companies like, see, generally in the share market, we will suggest always you need to go with the large cap companies or mid cap companies like this, right? So since the risk we can mitigate there. Okay. So if you are taking the Reliance, MRF, these kind of shares. Okay. So if I want to purchase one share, I need the minimum 2,500 rupees. If I want to purchase the MRF share, I needed the at least 1,40,000 rupees. This is just a base charges I am telling apart from the general charges, what is happening for the purchasing and selling, these kind of things. On top of that, service taxes, there will be multiple charges. Okay. Even if I'm taking the jockey company, that is the 40,000 for each share. Right. So how the people can invest? I mean, if some normal person they want to enter into the share market, okay, and if they want to invest, so it's not the possible case. So to invest in the top companies, but there will be some companies like SBI, something and all. Maybe those are available in the 500 or 600, something like that. Okay. But if you want to take the multiple shares over there, obviously you need the good amount of money here. Okay. So suppose if I'm coming to the mutual fund, right, even with the 100 rupees also, I'm getting chances to invest in the multiple bigger companies, multi-bagger companies, as a top companies. So even with the 100 rupees of my investment also, I'm getting that chance here. Okay. So coming to the shares, right, as I told just some time back, like Kingfisher. So there is some examples, companies has been closed in the shares. Okay. But if you're coming to the mutual fund, till now, I mean, one or two scenarios, the company has been closed, but that has been merged with the other companies. So example is the Reliance company, so which was managed by the Mr. Anil Ambani. Okay. So due to his bankruptcy, he came out from the lot of businesses. But that Reliance Mutual Fund has been merged with the Nippon India company. Okay. And the second instance, around 6 months to 7 months back, L&T company, they want to come out from the mutual funds. And that has been merged with the HSBC. Okay, so none of the companies are closed all of the sudden here. Okay, proper merging will be taken care. After that only the company will be closed. Okay. So people can raise the query like, say the mutual fund industry is good, why L&Ts came out. See, that depends on their personal interest. Right. See, some people they want to enter into different areas. Okay. So we can't say, right? It's if they are coming out in the sense the industry is not good. Right. So earlier we have the around 15 to 20 companies only in the mutual funds. Now we have the 45 plus. Right. Even still new more companies are coming into the market. Even Mukesh Ambani's Reliance also once again they're coming into the mutual funds. Right. See, that depends on the persons. I mean, what are the company CEOs or company MDs? they are having the different plans. If they are coming out means that doesn't mean that is not working properly, or maybe they seen some drawbacks over there, or maybe they are thinking the industry doesn't going to exist. Okay, see, maybe we are seeing the Bisleri water and all some examples, right? We think that is a good company, right? But whoever the current CEOs, their daughters and all, maybe they are not liking to take up that business, right? That doesn't mean that business is not good, right? Okay, so that is depending on the company CEOs and the individual decision, that is that founder's decision. Okay, so based on the needs or based on their interests, the strategies they are changing. Okay, so if you want to get the good returns and if you want to get success in the share market, right? So we need a lot of skills over there, a lot of strategies we need to implement there. Okay, so time to time we need to take the proper decisions. Okay, unless long-term investments. Okay, so to mitigate the risk and here fund manager is taking care of all these kind of things. You need not be expert and you not be involved in the multiple areas here. Okay, you need not to monitor your funds regularly. Okay, so these are all the main benefits we are getting from the mutual funds. That's why we should not consider equities and mutual funds both are same. So just equities option, it is utilizing by the mutual funds as a one of the investment option. That doesn't mean both are same. Okay. Even a lot of times equity is given negative returns. That moment also mutual fund given the positive returns. Since the diversification they are doing. Okay. So based on the time to time, they are implementing a lot of strategies. Okay. How much percentage we need to keep in the debt funds, how much percentage they need to keep in the gold, how much percentage they need to keep in the real estate. Like that, they are implementing the n number of strategies based on the markets, based on the scenarios. That's the reason most of the times we will be in the positive returns only. That could be vary. Maybe sometimes it will be 5 or sometimes it will be 10 or sometimes it will be 15 like that. But most of the times we will be in the positive mode only. Okay. That is what the advantage coming from the mutual funds, since these are managing by the professionals, experts in various financial instruments. Okay. So just I want to show one example related to the where and all generally mutual funds they are investing. Right. I told here is a multiple companies. See, if I take the one example, SBI Equity Hybrid Fund only. Okay. You can check it out how many companies they are investing here. 83 companies. Okay. Suppose I invested 500 rupees. My 500 will be invested in all these 83 companies. In what level it will invest? See, maybe ICICI Bank is a 7.11% out of my 500. Okay. Reliance company within that 500, what is the 5.42%? That much it will be investing in the Reliance Industries. You can check it out. What is the Reliance Industry cost one share? See, around 3000 is there. Okay. If I want to invest in one share, at least I need the 3000 here. But if I have the 500, also I can invest in the mutual fund, or even 100 rupees also I can invest in the mutual fund. Very minimal amounts I am telling. But you are getting the opportunity to invest in the all these big companies. Some portion of whatever the investment you've done, as per the fund manager's decision or whatever the allocation they've done for the each company, accordingly our amounts also it will be invested. Okay, you can check it out. See, MRF 4.05% they are investing. If I want to take one share, what is the price of MRF here? So currently running the 1,36,000. Okay, so how many people can invest here? But through mutual funds, you are able to invest in the MRF with your small amounts also. That is what the advantage it is coming from the mutual funds. Okay, hope it's given thee some idea and you are able to understand share market is different and mutual funds market is different. Okay, just one instrument or one investing option of the shares it is utilizing by the mutual funds. That's it. Okay. Hope it's given the clarity to you and enjoyed the video. Please don't forget subscribe to our channel and do the like and give your feedbacks or comments and whatever the suggestions it is there, and share with your friends and family as well. Thanks a lot.